All right, this is Independence Money. Our tagline is we protect assets and income from the theft of taxation that either attracts you or repels you. That's what good marketing is, right? So a little bit about Amanda and I'm Nathan.
I'm Amanda.
We actually have legitimate LLCs behind our YouTube channels. So we're not just an educational channel. We have what's called personalized education programs. So if you hear something you want to learn more about, we offer complimentary calls. And then if you want to engage our services, we will literally walk you through education that we've learned as entrepreneurs. We manage 3 LLCs together, 4.
Some days it feels like more.
And then there's about 9 investment LLCs behind that. So, all right, well, I know David's in the background, but I want to give a shout out to David Morgan. This kind of started when I wrote a tax article for the Morgan Report and caused a little bit of a stir. And it came to the realization of the Silver Symposium that we talk about a lot of investments here, and they're all diverse, whether it's mining companies or precious metals or crypto-backed metals or real estate, whatever your flavor is. The one thing they all have in common is they all flow through a tax code of some sort. So that's what we're going to launch into.
Yeah, so we're going to introduce ourselves in a sec, but then we are going to also talk about one of the biggest issues that people aren't aware of is how metals are taxed. We always say you need to invest with the end in mind, and taxes are always going to be there when you transact in any investment. We're also going to go over some tax strategies that you can implement with cryptocurrency, metals. We're also going to elaborate on some international real estate because as this is a metals conference, I think anything diversified and outside of the dollar, everyone is interested at this conference. And let me get a show of hands. Do we have any real estate investors in the audience? That's what I thought. I thought it was going to be a lot. So as a lot of you are going to be familiar with a 1031 exchange, and there's some huge issues for real estate investors, and we have a program called the 1031 Rescue that we're going to kind of take you through as well. And then we're going to have a workshop right after this in the other ballroom where we're going to kind of go over some actual examples of strategies we've implemented for our clients.
So this is a little bit about the problem, and the workshop is a little bit more on the solution. You can find us on YouTube if you literally type in the whole phrase Independence Money. But if you search for our tax topics, you're not going to find us. We've also been told that the people that subscribe don't get notified because I guess this message is a little bit contrarian to what YouTube wants to promote. By a show of hands, how many people are business owners? I just want to know my audience. Okay. Wow. So between real estate and business owners and the rest of you all own metals, right? Perfect. We're in the right place. All right, let's roll.
Yeah.
All right, I'm Nathan Wilson. I'm a certified tax specialist and certified estate and trust specialist. The statistics are out of the 2 million people in the tax profession, less than 1% of them are certified tax specialists. Somebody asked me the other idea behind that, and I was reading different customers' investment statements, whether it's Merrill or Morgan or Ed Jones, and down there in the fine print, they all said the same thing. Your financial advisor is not a tax advisor. If you have tax questions, see a tax advisor. And I was like, well, how do I become one of those? I had no idea how blue of an ocean it is. I have not met another team that does what we do. We work with CPAs. We're not CPAs. That's too drudgery for me. So we consult with a lot of CPAs clients on tax strategies. So it's a fun line of work. And this is Amanda.
Yeah, so I have a degree in corporate finance and accounting. So I started at a corporate real estate firm. I did underwriting valuations for large multifamily housing. This was back in 2018. So before real estate kind of took off, I got out and I met him. And of course, I never even knew what a tax advisor was. I was like, I took tax accounting. What do you do? So he picked me up and we kind of call ourselves left brain, right brain. He loves to do all the research and the creative strategies around these tax strategies and looking at what Congress does and how they implement all these loopholes for themselves, because obviously they're getting tax benefits, so why can't the everyday American benefit from them? And then I kind of come in and say, well, how are we going to implement these strategies into someone's portfolio and do all of the implementation and logistics?
Yeah, and I often say about Amanda, she was a brain I found out I couldn't live without.
Thank you.
So I love to quote movies, mostly like, Tombstone and such, but in this case, The Firm by John Grisham, and he's got a great line. I say it like dozens of times a month. The IRS writes the rules, and we get paid to teach people how to play. The difference between tax evasion and tax avoidance is perfectly legal, and they give you the laws to do it. You just have to be nerdy enough to read tax law. So I think we'll tag team this. So how metals are taxed. How many people think if you sell metals that you've held longer than a year, it's a long-term capital gain? Anybody? We usually have a few. So if you sell real estate, if you sell crypto, if you sell stocks, if you sell your own business and you've held it longer than a year, it's long-term capital gains. Long-term capital gains is one of the most favorable tax codes we have. So in theory, the low end of long-term capital gains is 15%. The high end is 20%. But if you are already in the 15% aggregate or average tax bracket, not your top end bracket, but your average bracket, if you're 15% or less, long-term capital gains drop to 0. So they're rewarding investors and obviously take advantage of it. On the flip side, if you're in the highest tax bracket, we have a husband-wife doctor client in Arizona. They make $2 million a year as W-2s. Like, that's the worst tax code ever. They're in the 42% tax bracket. Long-term capital gains stop at 20. But then you pick up the 3.8 Obamacare tax.
It's called the net investment tax. Not a lot of people know about it. We found out mostly about it when actually my parents had a personal experience of selling some of their assets off and then got hit with this lovely tax. So they enacted this in the Obamacare. So if you sell any asset and you're above 280,000 AGI, so adjusted gross income, and it's anything investment. So if you do an IRA distribution, if you have a capital gains, you get an unlimited 3.8% tax tacked on to every investment. So it's kind of like taxes on top of taxes on top of taxes.
Yeah, I'm from Oklahoma, so my dad has what I call Oklahoma-isms. How many bites can you take of the same apple before there's nothing but the core left? And so a lot of times governments take political pressure for raising taxes, so to kind of get around that, they just created another tax on the same money. So this is money that hits two taxes. But back to metals. Metals are treated the worst in the tax code. They're at 28%. So if you're in the 0% tax bracket and you sell metals, you're at 28. If you're in the 15, you're at 28. Now, on the other hand, if you're at 42, you're at 28, plus the Obamacare tax. So they're treated really unfairly. They're treated as a collectible, and I'm not even going to get on the Constitution and what it says about that because I think you guys already know. So they're treated at 28. And then the other thing is there's no swaps. So if you are sitting on Eagles and you want to go to bars because you want more weight and you do that swap, it's taxable. If you go from gold to silver, it's taxable. So anytime you trade, it eats up your profits, and that's something we're going to teach you how to get around. If you want my opinion, why they treat it as a collectible is because it's the same thing as art or a Shelby, classic Shelby Mustang, right? It's not in the system. There's no custodian. There's no statement. There's no reporting to the IRS what you own, and they just don't like that, which, quite frankly, is why we like owning it. So let's get to some solutions here.
Yeah, so a lot of people are not aware that you can buy metals and real estate and cryptocurrency and pretty much any investment in a self-directed IRA. We actually have met people from our YouTube channel that have listened to some people and broke their IRAs, so meaning they took an IRA distribution to buy metals, and they weren't aware that you were able to do this. So you have to do it with a qualified custodian. This isn't something you can just go to Charles Schwab or Merrill Lynch or anything and ask about. And quite frankly, they're probably going to hinder you and tell you it's a really bad idea to do this strategy. But there are some do's and don'ts with self-directed IRA, and not a lot of people know about them. So the first one is you have to keep it inside a US bank or a depository. So a lot of times you can see maybe Singapore Silver, they have on their website that they accept self-directed IRAs, which is actually a prohibited transaction. So I don't know why they say that you can do that, but it is illegal. So if you ever got caught in an audit, that would be very bad. And you also need to keep really good records of this so that when you transact, you have to report everything to the government. And you cannot hold any of these metals inside your house. That is considered self-dealing. So definitely don't do that. It's like if you owned real estate inside of your IRA and you stayed the night in that house, that's also a prohibited transaction. So we call that self-dealing. And we also want to make sure that the metals are also IRS approved, which we found out, I think, 6 months ago almost, that there was an entire list the government put together of all the coins that are IRS approved. And of course, it doesn't make sense. So typical government. But do you want to go to that slide?
Yeah, so a little bit more on self-directed. It basically, the money leaves your traditional custodian like Schwab or Fidelity or whatever the case, and it buys an LLC that you formed with the qualified custodian, and then it ends up at a bank account and looks like any other LLC. So you can buy real estate, you can buy precious metals, you can buy a lot of things. The rules are actually don'ts. So it literally says, here's the things you can't do. There's not a list of things you can do. It just says what you can't do. So if you just follow the rules, you're fine. I own my residential real estate in a Roth, so I just don't like paying taxes. So why not own it in a tax-free code where there's no long-term capital gains or anything? So let's get into the list of approved coins. It's very specific.
Yeah, and I think even examples, as you can notice, so you can buy an Australian kookaburra coin, and that's silver, but if you bought it in gold, technically that's an illegal transaction. So I don't know who came up with these or why they did, but in my head, it doesn't make a lot of sense, but we just want to present you with the facts, and so you're doing everything by the book, especially when they're going to hire all these IRS agents to audit you.
Absolutely. And, regarding vaulting, you mentioned you can't have them at home. So if you have an account with a vault in your personal name, you'd have to have a separate account in the name of your self-directed. You can't have them commingled. So again, we can walk you through all this stuff. I mean, we've spent a lifetime learning this sort of thing. So it's fun for us to teach.
All right, let's get to the good stuff. So why would you hold this in a self-directed IRA? Well, hopefully if you're here, you think metals are gonna rally and gonna go up in price. So that would be the number one reason you hold it in a self-directed IRA, because it's gonna save you a lot of money in taxes. Because when you press the sell button, you do not have to pay that capital gains tax, because trading inside an IRA is not a taxable event. The taxable event is when you take an IRA distribution. So if you plan to keep it inside your IRA until whenever, then that would be the best way, especially if you're gonna keep trading back and forth and back and forth.
Yeah, and let's just do the math. I mean, silver's at $20 an ounce, and let's say you converted 100,000 fiat ounces, that's 5,000 ounce coins, right? I think I read in the Morgan report that before they started cooking inflation or CPI in 1982, by stripping out energy and housing, which, by the way, is the most expensive part of our lives, right? If you were to apply the pre-1982 CPI to silver as a commodity, forget it being money, silver as a commodity, I think David Morgan said it's $300. So if you take 5,000 ounces times $300, it's $1.5 million on a $100,000 cost basis. You'd really hate to give that up in taxes, and you can either defer that with an IRA or you can skip it all together with a Roth.
So some of you might be familiar with the 80-50 rule or phenomenon. I think it's definitely been talked about on some YouTube channels, and I know David Morgan's also talked about it. So this is a model that if you would have traded back and forth from gold and silver over the last 30 years, you would end up with a 466% return on your bullion, which is a really good deal. The only thing that this does not take into account is I think you trade back and forth from gold to silver 9 times. So if you have to pay 28% in taxes plus possibly another Obamacare tax at 3.8%, that's definitely going to hinder every time you're trading, because now you have less and less and less. So it's definitely something to consider if you're going to be trading a lot.
And I think this chart is also an advocacy for the crypto-backed metals. So do your own due diligence. We had a person reached out to us on our YouTube channel, and we put an analyst on it, and he found out that that particular crypto project was backed by nothing but air, which is kind of like why we're hedging against fiat, right? So do your own due diligence. I think David Morgan talks about the load project. So, instead of you going out and finding a buyer every time you want to do a swap, you could just literally do that on your app with load and switch from gold to silver. The other factor here is if you look at this chart's fine print, it's fractionated ounces, which is really hard to trade like that in the physical world where, like load, for example, you could trade down to, I think, micrograms, but Tom's running around here somewhere. You could talk to him. He's a great source of information. So yeah, I mean, that's 4.66 times the amount of weight, not the price. So the price has obviously gone up as well. So that's a great thing to do in a self-directed. And if you're self-employed, you can also do a self-directed 401k, and you can contribute up to $63,000 a year to that. So that's a big difference.
All right, so this is a strategy that we perform on people all the time. It saves taxes. So this is an actual case study. So we had a couple, they were married filing jointly. They were making about $250,000 a year. So they had 1,500 1-ounce coins of silver eagles. So they had bought them at $31.87. So they have roughly $47,000 in their IRA. So inside the tax code, you can actually convert your IRA at the spot price. So we kind of call this strategy using the premium you buy in as your friend, because this transaction, you're now converting your IRA at $28,000. So this would save you about $6,300 in taxes.
Yeah, and again, keep in mind we're an educational channel. This is not individual investment advice. Run this by your tax attorney or CPA. I ran it by my tax attorney, and he said, look, you don't have to sell to get a bid on what you're wanting to sell. So make sure you have some paperwork. Make sure you've contacted a bullion bank and you got in writing that they're wanting to buy a spot, or better yet, get one or two of them. So that, if the IRS ever questions, you're like, look, I got a bid on it. That's what it was. That's what I decided to convert it at. But a little bit about the difference between IRA and Roths. Obviously, Roths are tax-free. The IRA in English stands for individual retirement annuity. As a certified tax specialist, I don't call it that. I call it the IRS's retirement annuity. Because what is an annuity? It's a guaranteed stream of payments you can't outlive. An IRA shells out a guaranteed stream of taxes for the rest of your life. They wrote the code completely in favor of themselves. If you want to find out for sure, ask us. This little brainiac built an Excel spreadsheet, and she can run your required minimum distribution tables, and it annihilates your IRA. Your heirs get approximately 1/4 of what the IRS gets in taxes when you own an IRA. So we spend a lot of time with individual clients converting IRAs to Roths and then using other tax strategies to mitigate or eliminate the taxes. This is one example.
And to go off even on the IRA as well, Nathan's very passionate about not liking IRAs. It also sets a lot of taxes for you in retirement. So your Medicare premiums, we had a client the other day that's paying $750 a month in Medicare because of their IRA. So there's a lot of different things that people don't think about in retirement until it's too late.
Yeah, I was going to say the IRA is like the little kid on the playground that goes around and kicks the other kids in the kneecap. So it creates federal taxes, and then if you live in a state that has a state tax, it creates state taxes, and then it sets how much of your Social Security is taxed, and then it sets your Medicare premiums. So that's 4 types of taxes. And by the way, when you put the money in it to defer from taxes, you only saved on 2, federal and state. You didn't save on Medicare or Social Security. So they don't give you the credit on the end, and they ding you on the expense on the way out. Again, they wrote the tax code exactly for themselves. And there's a form called a 5498. Some of you are going to nod your heads. It comes out in May. And somewhere along the way, you've asked your accountant, why am I getting a tax form in May when I filed my taxes in April? And your accountant probably told you, oh, that's just an informational form. Don't worry about it. Informational to who? You can see what your IRA is worth at the year end on your brokerage statement. It's an informational form to the IRS. So the IRS tracks every single dollar of tax-deferred money Americans have, and guess what? They look at it as an asset on their balance sheet. Because when they mismanage their finances, there's a big old savings account over there that all they have to do is raise taxes on. It's totally unfair. I think you get my passion.
All right, so why do we hold metals? Hopefully, they all go up and we get rich. But what happens at that point? What are you gonna do? Obviously, if silver goes to $300, you're probably gonna sell. But as all we know, not a lot of us like cash. So I don't think we're gonna be sitting in cash. So what do you do about this? And what's a strategy going forward? Because we always say you need to invest with the end in mind. So, anything to add?
Yeah, I mean, I think what metals holders have in common is they like alternatives to fiat and they like tangible. Well, tangible is also real estate. But if it's in the U.S., are you also picking up diversification? The answer is probably not. So again, beginning with the end in mind, we found a developer in Central America that has not had the run-up in the real estate market we have. Why? Quite simply, they don't offer mortgages. So if you have to work your whole life to buy a house, the prices are going to be a lot less than if you can go get a 2.5% mortgage and focus only on the monthly payment. That's why we have this real estate bubble, is artificially low interest rates. In Central America, they don't have that problem, and there's developers down there that are building beachfront properties for like less than 400 grand. 3-bedroom, 2-bath, fully furnished, solar panels, property management team, gated community, water, sewer, high-speed internet, everything you could need in 3.5 miles of very secluded beach. And guess what? They'll take your metals. They'll take your crypto too. They have an actual account with Delaware Depository. You ship your metals there, it goes into their side of the vault. They'll build you a beach house or a golf house or whatever else you want. So we do a lot of content on that. I think in June and July, we were in Central America. A lot of great videos there if you want to ask us about that. Doesn't hurt to get the education.
Yeah, so we wanted to talk to you on all the metals because that's why we're here, and you've probably heard a ton this last 2 days. But we also want to kind of talk about where to go and what other options are. So you know the U.S. housing market is just insane right now. I think we can all agree that prices are not they're at an all-time high. I think a lot of people are sitting in cash waiting to buy in. But I think where our problem is if we're on the side waiting right now, you're sitting in cash and you're losing up to 15 to 19% to inflation right now. So that's where we kind of looked south of the border. We started in Mexico, looking at international real estate there, and found that it's pretty expensive as well. I mean, if you think of Cancun and Puerto Vallarta and Playa, where all the tourists are, those are really expensive places to buy. And quite frankly, I think if you ask anyone that bought a beachfront property down there 20 years ago, if they regretted their decision, I don't think anyone's gonna say, I regretted my decision doing that. So the problem with Mexico also is they do not, you don't have title to the land there. So it's a 100-year lease, right? So that kind of deterred us as well. So then we looked further south than that and ran into this developer that accepted cryptocurrency, and this was last year too, so that was a really hot topic for us. And a lot of Americans go down to Costa Rica, they go to Belize, it's a very big tourist destination, so those places are also pretty expensive and the cost of living mimics America. So we landed in Nicaragua, which you might look at us and think we're crazy, which is okay, because I think the US government doesn't play well with Nicaragua because, quite frankly, whatever orders the United States gives, Nicaragua does not follow. So they did not shut down during COVID. They did not do any of the crazy antics. They were one of the only countries that business went on as it is because everyone works for a living down there. And you see that on the streets, how hard people work. If they're not working, they don't eat. So they're very sustainable. They have their own food supply, and they love Americans coming down there. They're super friendly. But most of all, the cost of living. I mean, we had lunch one day, and it was $3 for a big plate. So that's why we kind of push people down there to go check it out, get outside your comfort zone. If you say the United States housing market is too high right now. Well, let's look somewhere else. There's always an emerging market somewhere else. And we look at the Harvard endowment model. So they always say hold at least 10 to 15% in precious metals. And they also always hold 10 to 15% in emerging markets. So that's why we want to inform people on to if you're only in the United States, you're really not diversified.
Yeah, and we also like to talk about macro trends. I mean, we're all here because the macro trend is silver is the cheapest commodity out there, and it shouldn't be because it's one of the most used. And that's why we're deep value investors in the metals, right? But look at other macro trends, the Zoomers, right? All the people that now work from Zoom are no longer contained to their city or their state or even their country. Then you look at retirees with the rising cost of inflation and healthcare that you can get for a fraction of the cost down there. The healthcare is actually tier 1 on international standards, which is like the best of the best Canadian and US hospitals, but it's a fraction of the cost because they don't have our medical bureaucracy and all that HIPAA stuff they have to deal with. So I always like to say I want to go where the money's going, not where it's at, and I'd rather be early than late, and that's why I don't have a problem with the current price of metals, because it's not if, it's when.
All right. Well, we know the government's coming for you. That's pretty obvious. So I don't know if you've heard about the budget proposal of 2023. It's totally different than the Inflationary Reduction Act, which isn't reduction at all, but don't get us started on that. But there's something they slide through in the budget plan because no one ever looks at the budget plan. Why would you? There's some scary things, especially for real estate investors in there. They want to end the step up in cost basis, which for real estate investors, that is also called swap till you drop. So you 1031 exchange all the time, you never pay taxes, and then you just give it to your next generation and they push the cost basis up so you never pay taxes. Well, they're on to us. So they want to eliminate that. They also want to expand the Obamacare tax, which I think you are very knowledgeable on, so I'll let you speak to that.
I mean, they want to just expand it to literally apply the Obamacare tax to subchapter S LLCs. I mean, if we don't have enough regulations and taxes to deal with as business owners, this is just another one of them. I don't know how much of this is going to pass, but to me, it's like roulette, or Russian roulette. You got one live round in the chamber, and you spin it, and you pull the trigger. Maybe it doesn't pass this time. Maybe it passes next time, or the one after that. But the point is, they're coming after you. Who are you? The evil wealthy. We actually looked it up. How does the government define wealthy?
It is married filing jointly above 340,000, or if you're a singular filer at 170.
So let's say your regular earned income is not that. It's 100 grand, but you've been sitting on real estate for 10 years, then you sell it. Now you're wealthy. And they're actually looking at changing that for wealthy people. I'm not talking about 400 million. I'm talking about 370 grand married. They're actually looking at changing the capital gains to ordinary tax rate. That's part of our code's history. If you look at that spike up there in the middle, there was not a separate capital gains tax. That was the top of ordinary income. It's only been recently that long-term capital gains has its own tax bracket. So losing control of your taxes is a major problem. I also have a problem with deferring taxes from a low environment to a higher environment. There's a lot of people that give forecasts here. And luckily, I'm not in the business of saying, hey, the market's going to do this or metals are going to do that. I'm just in one business, forecasting tax rates. And I'm 100% right. They're going up. They don't even have to vote on them. The Tax Jobs Cuts Act expires in 2025, and they go back to the previous version. So even if Congress locks up and it becomes a split house, it's still going to happen. So take care of it. So it looks like Biden's budget proposal would bring us to the highest taxes in the developed world, which guess what? Means Americans and American businesses are going internationally, which is what we just talked about. Mm-hmm. You want to talk about Cali?
Yeah, do we have anyone from California in the audience? There we go, we got some. So there's this crazy thing in California called the California Clawback Law. So if you bought real estate in California, you started there, and then you 1031 exchange to, let's say, Texas or New York, you don't pay the taxes in California, but then I think there's 6 states that do this as well. So when you create that taxable transaction in another state, California actually comes back to you and asks for their taxes. So, and that's also taxed at ordinary state income tax rates, so that can go all the way up to 13.1%. So you might have thought you had a really good gain in real estate, and then California comes back and says, nope, you're gonna owe me another 13%. So that's also something to look for. Some other states are also talking about passing that.
And if you didn't sell in a tax-free state, you sold in a state that has an income tax, both the state you sold in that has an income tax and California are going to both tax the same dollar on top of the feds, on top of Obamacare tax. That's 4 taxes on the same dollar.
All right, so there's a lot of problems, but luckily we have solutions. So we have a 1031 rescue program that if you've 1031 over and over and you have large gains in real estate, we have ways to eliminate up to 99% of those capital gains that you owe. And the same goes for any large unrealized capital gain. It doesn't matter what investment it is. It could be stocks, precious metals, real estate, cryptocurrency, pretty much anything. There's ways that we can help you, so definitely come talk to us. We're also gonna have a workshop after this and drill into some personalized cases we've done and answer any personal questions you have.
And regarding the precious metals, we mentioned you can't do a 1031. You can't do the 1031 in your personal tax code, but like I said, IRS writes the rules and we teach people how to play. So we have a tax code where you can. So if you're sitting on some of the people that are 100% silver and when it really, really rallies, they want to swap to gold, we can have a strategy to where they can do that and not pay 99% of the capital gains. And then you could trade and still not have them. The advantage is you don't have to be ready to sell now. If you put this strategy in place just so you're ready, you could sell 3 years from now or 5 years from now and still avoid the long-term capital gains. So lots of different strategies we're going to go through on the workshop after this.
Here's our contact information if anyone wants to get in contact with us. We also have a YouTube channel called Independence Money, so you can go check it out. There's all videos on tax strategies, LLC structuring. There's our cool Nicaragua videos. You can go watch all of them. They're really fun. There's videos of me ziplining, so.
And we got some great videos with David Morgan. We've got some videos with the Load Project. You know, again, it's just education. That's really our commodity is our time and expertise. We're not really on the grid for making money on the stuff we distribute through our education channel. So like I mentioned, we do offer complimentary calls. And I know being that we opened up the tax Pandora's box, some people have some questions. And
yes.
And we will come down there to you so we can record your questions with our mics.
So we also have Nathan Loves Offensive t-shirts, which I know probably some of you do as well. So we also have some t-shirts on our merchandise store on our website, and we have some here today. So if you ask a question, we have some t-shirts if you want one.
And for those of you who can't read that, we often say on our channel, if your money's not independent, how independent are you? And being that we're at a precious metals conference, that makes sense. If you're tax adverse, we protect assets and income from the theft of taxation. And if you're just happy to like governments to stay out of your business, we've got if they take me back to tyranny, they won't take me back alive.
You want to take it? Yeah. All right, we'll take questions now. Go for it. Nathan, you want to take the t-shirts down there?
Sure.
He's coming with the microphone. One second, I can't hear.
You mentioned real estate in Nicaragua. What about Panama? Real estate?
I mean, Panama is a much stable banking system. It's very internationally stable. Not my jam, not enough beaches or scuba diving, a lot more high rises. The cost is up. They just closed down their citizen by investment program, so there was all this money flooding in there to be able to get that plan B, and that ran up the prices, and now they changed it to where you have to have, it's either 200,000, I think it's 200,000 of real estate, could be $250,000 of real estate, and you have to hold it for like 5 years to get it. So it might slow down, but on the other hand, if you like a cooler climate, there's the Highlands, and that same developer we talked about is developing in the Highlands of Panama. Great question. Anybody else?
I was going to ask the same question about El Salvador, knowing.
Okay, I'm a statistics guy. Nicaragua is the safest country in Central America by violent crime. Way safer than Mexico. It's safer than St. Louis. It's safer than Cincinnati. There's literally not crime there outside of pickpocketing. Drugs. There's not drugs. There's no cartels. The drugs are kept contained by the government. I'm not saying there is drugs, but if there are drugs, there's not competing people over it. It's kept under the rug, and so there's not the outbreak of violence. They're very libertarian-minded. They have the least amount of lockdowns.
Yeah.
El Salvador, I think, is the murder capital of Central America. Do you want to share it? Well, do you want taxation or independence money?
I'm one of those Americans that just simply owns my house jointly with my wife. And I've absorbed some of Robert Kiyosaki over the years and things like that about if you're paying taxes, you're not doing something right. So for those of us who just want to own a home, is it okay to be owning it jointly, or is it better to do something smarter?
So the question is, if you own it jointly, I don't have a problem with owning it jointly. If you have a fixed rate mortgage, might as well borrow the cheap money. It's a lot less than inflation. I mean, personally, we do asset protection strategies. We got a question about that earlier. I deeded my house to a Wyoming LLC, and Wyoming doesn't even release who the managing members are of their LLC to their own state government. So talk about privacy there. If you looked up my address, you would have no idea to track it down to me. So yeah, do I have a mortgage? Is it owned jointly? Yes, but it's deeded to a Wyoming LLC for asset protection and privacy. Great question. Sure. Anybody else?
I got a question over there.
Okay.
I haven't heard any discussion about the pension crisis that is developing in this country. A lot of 401s, a lot of institutional pensions. Because of the age demographic, we've got less contributors, autonomy, things of that nature. These pensions have to generate a minimum 6-7% to hold water, tread water. And do you recommend those people that are locked into these 401s, these pensions, try and find a way, an avenue? Some of the pensions you're locked in, some, once you're retired, you're allowed to move certain assets in and out. Do you recommend people find more secure avenues of revenue streams when they retire?
Well, we don't give individual advice, but you want to take the general question?
Yeah, I think there's a couple different things with 401ks. So they first came about in the 1970s when tax rate, or early 1950s, I think, when tax rates were crazy. So that's why people were deferring so much money into their 401ks and their pensions, because they were receiving these large tax deductions to offset their earned income and not pay as many taxes. So now we're having this problem of tax rates. When you're selling right now, you might be in a higher tax bracket in retirement, which is setting all of these Medicare premiums or taxing on your Social Security. So we help people also analyze if doing any conversions on your IRAs or 401ks to a Roth is beneficial to you, how much money you can save in the long run if you're gonna, I call it breaking your IRAs. So we do a lot of analyzing. If we do that over a 3-year strategy, is that the best? Some people you can break them in 1 year and it's really tax efficient, but we love to, analyze that for you. Was there another part to the question as well?
I mean, outside of specificities, if you rolled your IRA or your pension lump sum into, precious metals, international or even domestic real estate, you're a little bit insulated from any kind of catastrophic, financial meltdown on what I call the passive markets, bond and stock. Mm-hmm. I think we got time. What's our time? We got 2 more? We got 2 more T-shirts.
Yeah.
How much do you guys do in estate planning?
Well, I'm neither an accountant, but I'm a tax specialist, or a lawyer, but I'm a certified estate and trust specialist. So our realm is on the design. So you can save a lot more money on an attorney if we go to them with the design and we say, hey, paper this up. I call it legacy planning. So like wills and trust, yeah, fine. I mean, I could give you a referral on that, but if you want to protect it from predators, creditors and thieves, if you want to make sure you have control to where if your kids get married and then they get divorced, that the ex isn't taking it. If you want to protect it from taxes, if that's what your nature of your question is, we do that a lot.
And then we usually work with attorneys once we develop the strategies, and then we have attorneys that work with us so that we can actually implement them. And another thing we help people do is funding trusts, which is a step that a lot of people miss. So you might get this huge estate plan done and you put it in your drawer and you do nothing with it. You have to actually go to all your accounts or everything you own, all your assets, and actually fund your trust and title everything in the name of your trust. So we help a lot of people do that as well.
I think another follow-up answer to that is we're part of what's called a virtual family office. So what that is that's a bank of professionals that you can't go to as a business to consumer. They only want to deal with other qualified advisors or B2B. So we can do things like cost segregation on real estate. We can do installment sales where you kick your capital gains out 30 years from now. Research and development credits, if any of you are some of the vendors and you're doing a cutting edge new development, we do R&D credits and things like that. And then lawyers and accountants, we got tons of those working for us. So we haven't found something we can't do, but I'm always up for a challenge. So maybe in the future I'll find something we can't do. Fort Collins. But we have clients all over virtually. Zoom. Perfect. All right, one more question here.
Sorry if you already addressed this, it came late. I participate in the LOAD project, and we'll probably discuss that a little bit more at the workshop. But what are some basic fundamentals or thinking one would want to start considering when participating in a program like that, the cryptographic silver LOAD program, when it comes to tax implications? Not for me specifically, because we're all different, but what would be the line of thinking that one should consider when engaging in a project like this? Some other commentators mentioned Monero or other cryptos. It seems like a real moving target. Yeah, kind of tax related. What should we be anticipating if we're considering getting into it? I'm already into it, but it'd be interesting to know your thoughts on that issue.
Sure, I'm going to answer that two ways. So as I mentioned, you can't physically hold your precious metals outside of the country in a self-directed IRA or Roth or 401k. The IRS looks at LOAD as crypto. We could argue that it's backed by metals. They look at it from a tax code as crypto. So a couple things you get from that. That's a way to have a self-directed IRA, Roth, or 401k. If you want your metals out of the country for some reason, like confiscation, you might consider, instead of physical, you might consider something like the LOAD, because that's perfectly permissible to have loads, metals in Switzerland, for example. From a taxable standpoint, now we flip to long-term capital gains. So you sell the physical, it's a 28% collectible, but you sell a LOAD, AUX or AGX, it's a long-term capital gain, and if you're in the 15% tax bracket or less, it drops to 0. So I'm really glad you answered that or asked that question, because that's a loaded tax question on a couple of angles. Does that make sense?
Mm-hmm. Yeah, Nathan, you actually hold LOAD in your self-directed Roth, I think, right?
I hold everything in tax-free codes.
Yeah, I know you do.
All right, are we out of time and ready to hit the workshop?
Yep.
Okay. Thank you, guys. We really appreciate it.